In today's video, I'm going to take a look at the mining stocks, and I'm going to show you a little trick that smart traders use to minimize risk on entering a trade. So in my last video or chart of the day, I don't remember which, but I mentioned that the XAU would probably come down and at least tag, if not maybe close a day or two below this 200-day moving average. And so far that's happened. Now we've got a reversal here, but I'm going to just caution a little bit more patience. These reversals don't always mean that price is ready to reverse. And in our modern markets, a lot of times these reversals can just be reversed again the very next day. So a reversal here isn't a guarantee that the daily cycle low bottom today, so a little bit more patience. Now let me show you a trick that smart traders use when entering positions to limit risk. And this could be for either way, longs or shorts, but in this case it's going to be a long. So we've got the obvious stop level here of the 200-day moving average. So you could enter a long position above the 200-day moving average and then use the 200-day moving average as your stop. The problem is if price breaks the 200-day moving average, then you may get stopped out, and then if it reverses, you get stopped out for an unnecessary loss. But one trick that smart traders can use is they can enter positions below their stop. So by that, what I mean is, let's say you want to use the 200-day moving average as your stop. Well, if you wait for price to drop below the 200-day moving average, then you can enter your position below your stop. So if by the end of the day price hasn't recovered and moved back above the 200-day moving average, then you could, in theory, you could just stop out, and you would stop out with a either a very small loss or maybe even a marginal profit on the trade. In this case, today anyway, if somebody wanted to use the 200-day moving average as their stop, and they wanted to enter below their stop, they could have done that this morning with the XAU below the 200-day moving average, and then at the close, if the XAU had not recovered the 200-day moving average, they could just exit the position with basically with no damage being done, and then they could wait and see what plays out over the next few days. As it is right now, if you entered below the 200-day moving average, then at the close today, you've already got a small profit, and you've got a little bit of a cushion here. So if by chance this does form a swing, and this does turn out to be the daily cycle low, then you would have entered at the exact bottom of the cycle, below your stop, which would have been the 200-day moving average, and you would have had very little risk on that trade. Now, that being said, like I said, let's be a little patient here. This may not be the daily cycle low, and here's the drawback. If a lot of traders use this entry right below the 200-day moving average as their entry, and now they are holding their positions, if the miners reverse again tomorrow and continue back down, well, then all of those traders that bought long positions today are going to be stopped out if price goes below today's low. So that could exacerbate the selling. So a little bit of patience here. I'm not prepared just yet to call this a mild daily cycle low. We are clearly moving down into a daily cycle low. We've got all the classic DNA markers of a move down into a daily cycle low. We've Price has broken the daily cycle uptrend line. The 10-day moving average has turned down. We're not quite there yet, but we're getting pretty close to the 5-day RSI moving into an oversold condition. Now it's not absolutely mandatory that this has to get oversold, but most daily cycle lows do. It is perfectly conceivable that this could turn out to be the cycle bottom, and we just get a mild daily cycle low. Other than this not quite reaching oversold yet, all the other DNA markers are there. Like I said, we've broken the trend line, and the 5-day RSI, or the 10-day RSI has turned, or 10-day moving average has turned down. So, most of the DNA markers are in place for a daily cycle low. So, it is possible that this turns out to be a mild daily cycle low. If we form a swing tomorrow by moving above today's intraday high, that would be, the first confirmation anyway. But one I would be a little bit leery of trusting, just simply because, as I said before, I think the stock market, I think the daily cycle is going to stretch. I think it's going to be propped up into the State of the Union address, and that may just put some pressure on the metals and keep the dollar propped up, for another week as we move into that State of the Union address. And then once we get through that, then I think the odds are better of the stock market daily cycle topping and then moving down into its daily cycle low. But for right now, that cycle is probably going to stretch. I just don't think they're going to allow any significant correction ahead of that event. So that could keep some pressure on the metals for another 4 or 5 days. So just a little patience here. I wouldn't jump the gun and just automatically assume that we've got a mild daily cycle low right here. We may have, but I would probably like to see what happens tomorrow. And I might even have to wait until price closes back above this 10-day moving average before I would try and call a daily cycle low, especially if this 5-day RSI doesn't get oversold.